Hey guys, what's going on? Welcome back to the channel. So today's a pretty green day in the market. It is July 12th, 2023, and if I filter by the past one day, the current trading day, we're up 0.91% on a mostly conservative dividend portfolio. If I click into the S&P 500, we can see that today the S&P is up 1.12%. The Nasdaq is up 1.46%, and the Dow Jones 0.83%. And the catalyst for this was today's release of the June CPI report. And the headline figure here is that inflation eased to just 3% in June, coming in below expectations. And here's a chart going back to the 70s of both core and overall CPI. And right now, core is a bit higher at 4.8%, and combined is 3%. And we can see the general trend here. This is potentially an easier, cleaner graph to look at. And core inflation is the dotted line, which is less food and energy, which tends to be more volatile. And now it's sitting at 4.8% versus last month, May, 5.3. And when it comes to all items, it's even better, a full percentage point down from the previous month. And in case you're wondering, on a month over month basis, that's a rise of 0.2%. So that's why the market is pretty happy today. And we see pretty heavy movement in the bond sector. So ticker VGSH is a short-term treasury ETF, and today it's up 0.3%. Pretty massive for a short-term treasury fund. And this is a reversal of the past month, 2 months of price action, as investors were expecting inflation to be higher than expected, the Fed having to raise rates more. This is a nice little pivot off of that. But that leads us to the next question, which is what is the Fed going to do in response to this new data? The expectation was up to this point the Fed is going to raise rates 2 more times, each being a 25 basis point rate increase. The next meeting is in 14 days, and the consensus right now after this data is still a 95% chance of another 25 basis point rate increase. And if we go ahead and take a look at the current odds for the following meeting, which is in September, the highest probability right now, which keep in mind it is pretty far away, is 84% chance of not raising rates at that next meeting. And between now and then, if we get additional positive, lower than expected CPI reports, this is going to become more and more probable. I would expect the market to respond positively in that scenario, and I would expect the value of these bond funds like VGSH to continue to increase their price as the future yield isn't expected to be much higher. In other news, my portfolio just passed $54,000 in value, up a total of 7%. I also noticed that year to date, we're about halfway through the year, we have $1,000 of earned dividends. So if we double that for the full year, I should have about $2,000 of passive dividend income with a balance of just $50,000. And luckily, that is largely regardless of what the market does, because there is a pretty high probability that the second half of the year isn't going to be as green as the first half. But dividends usually don't care about that. And if anything, with my covered call funds like XYLG, increased volatility would increase the premiums earned by selling call options and might actually increase my dividend income. That's another reason why I love having covered call funds in addition to my equity positions. Now, sticking with my portfolio, I have been reevaluating the growth section of my portfolio. Right now, it consists of VGT, a Vanguard Information Technology Sector Fund, and BST, which is a closed-end fund. I don't know why the percent gain is so off with VGT. I have made $3,300 with this position with just $10,000 invested. So I've done extremely well with both of these holdings, but I have been considering changing this up to make it a bit more diversified and passive, because VGT, as mentioned, isn't a generic growth fund. It is information technology in particular, and the performance is fantastic. If you stack up VGT against other popular growth funds, VGT, I think, is one of the best performing funds on the entire market. And if you think about it, that makes a ton of sense. Most of the growth in, say, the S&P 500 is driven from the technology sector. So it's a great investment, but I have been considering switching to a dedicated growth ETF that covers multiple market sectors. And the fund in particular that I've been looking at is ticker SCHG. This is a fantastic performing large cap growth fund, and here are the top 10 holdings. Pretty basic, Apple, Microsoft, but you also have companies from other sectors like United Health Group. Another great option, as you guys are all aware, is the NASDAQ. Here we have very similar performance, but the QQQ is even more tech heavy. It's kind of a middle ground between something like SCHG and VGT. So please let me know in the comments, what is your favorite go-to growth ETF? So if I was to switch to a more broad market growth fund like SCHD, I was thinking a portfolio setup like this might be pretty solid. So SCHD, I currently invest in this fund. This gives you exposure to high quality value dividend funds. SCHG gives you broad market exposure to essentially the opposite end of the market. So those companies that exhibit high growth potential. And these two funds together essentially give you the S&P 500, but split between those two different kinds of companies. So because of that, I think pairing these with the S&P 500 itself isn't the most optimal choice. It's going to have a ton of overlap. And in my situation where I want to have a higher than average yield, I think XYLG is the better pairing. So it still does give you exposure to the S&P 500, but with covered calls. This is meant to boost the overall yield. So altogether, a portfolio like this has a dividend yield of 3.1%, and dating back to September of 2020, it has returns of 25%. But I'm a big fan of baby steps when it comes to investing, and the first step in achieving a portfolio like this would be to clean up the growth side of my portfolio with something like SCHG. So let me know your thoughts in the comments below. Thanks for watching, and I'll see you guys in the next one.